Quick question. Do you know the difference between getting pre-qualified and getting pre-approved for a mortgage? If you just shrugged, you are not alone. And that one mix-up has cost real buyers real houses, losing out to someone else whose offer just looked stronger on paper when it didn't have to. In the next 10 minutes, I'm going to break down exactly what a pre-approval is, what a lender is really checking for when they look at you, and the exact steps to get yours locked in. Explained so simply that a fourth grader could follow along. No jargon, no fluff, no talk to your lender for details, cop-outs. By the end of this video, you guys, you are going to know exactly what to do this week if you are serious about buying a home. Let's get into it. My name is Jose Carlos. I'm a licensed real estate agent with eXp Realty, and I've been doing this for over a decade, helping buyers, sellers, and investors actually close, not just window shop. Pre-approval is the very first hurdle every single one of my clients has to clear before we start touring homes. This is the exact conversation I have with buyers every week. Before we go any further, if you want this mapped out for your actual numbers instead of general advice, I've got a link in the description to book a free strategy call with me. No pressure, just a real conversation about where you stand. All right, let's get started with the basics. Here's the easiest way you need to picture it. Imagine that you're trying out for a basketball team. Pre-qualification is you walking up to the coach and saying, "Trust me, I'm pretty good." That's it. Nobody checked. It's just your word. Now, pre-approval is you actually stepping on the court, running the drills, and the coach writing down real stats next to your name. A lender pulls your credit, they verify your income, they look at your bank statement, then they hand you an actual number in writing backed by real verification. Here's why that difference matters to you, not just to some banker. When you make an offer on a house with a pre-qualification, the seller's agent reads that as a maybe. But when you make an offer with the pre-approval letter from the bank, the seller reads that as a this buyer is real and the money is already lined up to buy my house. In a competitive market, that difference can be the entire reason why your offer gets picked over someone else's. So, pre-qualification is a guess. Pre-approval is the actual proof. We're only interested in proof. This is the part that intimidates most people. So let's make it boring and simple because it actually is boring and simple. A lender is going to ask you for the following things. Number one, pay stubs. This is usually your last 30 days, and this proves what you're currently earning. Number two, W-2s or tax returns, usually the last 2 years, and this proves that your income is consistent and not a fluke. Number three, bank statements, usually the last 2 to 3 months. This shows where your down payment and closing costs are actually coming from. Number four, a photo ID, just to prove that you are you. Number five, employment verifications. Sometimes this is as simple as your employer confirming that you actually work where you work. And that's really it. The lender isn't being nosy. They're not judging your Amazon purchases. They need proof that the money coming in is real and repeatable because they're about to hand you hundreds of thousands of dollars and they like to be paid back. If you want a simple checklist with all of this laid out so you are not scrambling for documents at 11 p.m. the night before your appointment, I've got it all for free in a download link in the description. Make sure you grab it before you go any further. This is the part almost nobody explains simply, so let's fix that right now. Picture your monthly income as a whole pie. Every bill you already have, a car payment, credit card, student loans, that furniture you're still paying off, takes a slice out of that pie. Lenders look at how much of your pie is already spoken for, and that is called the debt to income ratio, DTI. Most lenders want your total monthly debts, including your house payment, to stay under roughly 43 out of every $100 that you make. Now, some programs are more flexible, some are stricter, but that's the general shape of it. Here's the part that trips people up. Your DTI is the real ceiling on how much house you can afford. It's not what Zillow tells you. It's not what your gut says that you deserve. And it's not your cousin who bought last year. These are your actual numbers. And this is also exactly why pre-approvals matter before you fall in love with a listing. Now, I'd much rather tell you your real number on day one than watch you get attached to a house that's outside of your pie. Your credit score is basically your trust score with money, and that is the whole concept. It does not have to be perfect. Now, I want to be very clear about that because a lot of people talk themselves out of even trying because they think that they need an 800 credit score. You don't. But here's why it still matters. The higher your score, generally speaking, the better interest rate you will qualify for. And a better rate isn't just a bragging right. That's real money saved every single month for as long as 30 years. A 1% difference in rate can be the difference of hundreds of dollars every month. And that adds up to a car payment's worth of saving every month for decades. So the goal isn't to be perfection. The goal is knowing where you are right now so we can make a plan, whether that's moving forward today or cleaning a few things up first. Now let's put this all together into one simple order of operation. Step one, connect with a lender. Now, if you don't have one that you already trust, I work with a short list of lenders who move fast and communicate clearly. I'm happy to make an introduction for you. Step two, submit your documents, the ones that we just covered. Step number three, the lender pulls your credit and verifies your income and assets. Step number four, you receive your pre-approval letter. And this usually takes anywhere from 24 to 72 hours, not weeks. Step number five, now and only now, you're ready to actually shop for homes with real confidence, knowing your exact numbers. And this is the exact process I personally walk every one of my buyers through. I'm not handing you off to a call center and disappearing. I'm in it with you from the very first step all the way to the keys in your hand. And I want to save you from the mistakes I see wreck deals more often than anything else. Once you're pre-approved, do not open a new credit card, finance a car, make a big furniture or appliance purchase, change jobs, move large sums of money between accounts without a paper trail. Lenders re-verify everything right before closing. Now, I have personally watched a buyer lose their entire approval because they financed a couch 2 weeks before closing. The couch was not worth it. So please don't be the couch person. A simple rule: once you're pre-approved, freeze your financial life exactly as it is until you have the keys. So to recap, pre-qualification is a guess. Pre-approval is proof. Lenders are checking your documents, your debt to income ratio, and your credit, not to judge you, but to verify you. And once you're approved, protect that approval like it's the finish line, because it basically is. If this gave you real clarity, that's exactly what it's like working directly with me. Not just on the financing piece, but on every single step of the transaction, from your very first offer to getting the keys in your hand. I want you to book a free strategy call using the link in the description right now. Grab the free document checklist while you're on there as well. And if you want more real estate content that actually respects your time and intelligence, subscribe. I'm putting out videos like this every single week. I'll see you in the next week.